Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of November 27th. First of all, I hope you had a wonderful Thanksgiving and you were able to enjoy time with family and friends. So the stock market has rallied off of its correction low, and the primary reasons are optimism that the Fed is pausing, in other words, not raising rates again, and that the economy is strong enough to avoid a recession. So regarding that latter point, we're very optimistic that if we have a recession, that's not going to be a sharp and deep one like we saw in 2008, because areas in a recession today, like manufacturing, are stabilizing and even recovering. So with this as a backdrop, the key report we're watching this week is the ISM Manufacturing Index, which comes out on Friday. So let's discuss what this index is, why it's important, and what is expected. So first of all, what is it? Well, the Institute for Supply Management surveys hundreds of purchasing managers, and they ask a bunch of qualitative questions like, how are inventories? How are new orders? How is competition? A bunch of qualitative questions. If the index is above 50, it's considered expansionary. Below 50 is considered contractionary. As you see here, this index has bottomed out around 46 over the past few months. So second of all, why is this so important? Well, this index is one of the first looks at last month's economy. So this Friday's report will get the first look at November's economy. Also, it has a very high correlation to stock market returns. And third of all, what is expected? Well, the consensus expects a slight rise from last month's 46.7 to 47.7, still in contraction, but definitely improving. We think that the number could even be better than consensus expects because we feel the worst is over for manufacturing. So first of all, the UAW strike ended on October 30th. This should help. Second of all, construction spending on manufacturing facilities, as you see here, is surging. Companies are building out manufacturing pretty quickly, and a lot of it. Third of all, manufacturing job openings are picking up, as you see here. There are more jobs available in the manufacturing industry. You take all this together and the overall onshoring trend where manufacturing is moving back to the United States, we feel manufacturing is stabilizing and starting to improve. So the key takeaway is that markets are worried about the impact of rate hikes on the economy and whether or not we have a recession near term. We are confident that even if we have a recession, we expect it to be mild because areas in the recession today are stabilizing. Case in point, the manufacturing reading this week may prove to be better than expected and possibly show that the worst is behind us for manufacturing. Thank you for listening. For more information, please follow us on Twitter at Cetera IM and see you next week. And thank you.